Hello, everyone. Welcome to our webinar today at Finance Magnates. My name is Rachel McIntosh, and I'm a crypto journalist and podcast host at Finance Magnates. And I'm going to be chatting today with an amazing thought leader from the Forex world. And I'll introduce him in just a moment. But for just before that, a few housekeeping matters. Our discussion today is going to last for about 45 minutes. And after that, the floor will be opened up for questions from the audience. So we'd love to hear from you during today's presentation. So if you have a question for our speaker at any moment, please go ahead and leave a comment, send it in through the Zoom box, the Zoom window, and we will do our very best to get with that question at the end of the session. If we don't get to your question today, we will follow up with you after today's session. Just for your information, this webinar will be available on demand after today's live session. So if you miss anything, don't worry at all. We'll be sending the on-demand recording afterward when it's available. And you can also find there, in addition to today's panel, a few other panels that are upcoming and some information about other content that's coming through on Finance Magnates. Last but not least, we'd love to encourage you to share today's presentation on all your social media channels. Sharing is caring. Let people know that you're here. And last but not least, I'm going to introduce our wonderful guest, Peter Leonito. He's the Chief Sales Officer at Exclusive Capital. He's an industry veteran with over 2 decades of experience within the sector. And if you didn't know, Exclusive Capital is a regulated investment firm with headquarters, located in Limassol, Cyprus. They offer liquidity, brokerage and portfolio management solutions, and much more. Peter, welcome.
Thank you, Rachel. Thank you for that introduction. Hello, everybody. So, as Rachel said, that at Exclusive Capital, we do offer a lot of various solutions for institutional firms, for hedge funds, money managers, and so forth, right? And one of those solutions that we offer is called a white label, right? So what I want to do is get into it and discuss white labels. Now, when we say white label, in this sense, we talk about creating your own business, your own brokerage firm, investment firm, using a white label, meaning that we brand a solution, a trading platform for you under your name as a company, branded with your website information and so forth, right? So that, in a nutshell, is white label. What I want to do is really get into the nitty-gritty of it, basically, and people looking for white labels and what they should look for, right? My thought process of this is basically simple. It's plan, execute, adapt, and scalability, right? So what does that mean? If someone comes and says, Peter, I want to do a white label, right? A lot of the times I would say, okay, what's your plan? Okay, how do you plan to execute it? How you want to adapt it? And how do you want to scale your business for continuous growth? And the first thing I always ask for is, do you have a budget? Okay. Now, when we talk about a budget, we talk about, of course, your costs. What is going to be your cost? And you want to kind of map everything down. Now, when we look at costs, we look at regulation, we look at technology, we look at marketing, we look at banks, we look at operational costs, and so forth. Why it's important to do a budget, okay, is because you want to put all these costs down. Because in essence, you want to see how much this is really going to cost you, right? And then what I recommend is, when someone plans down his costs, is to have 3 different types of cost analysis: conservative, moderate, and aggressive, okay? And it should be a 3-year plan. It shouldn't be a forecast for 1 year. It should be at least for 3 years. And the first key point of your budget is your break-even point. When is your break-even point going to happen? Now, to get to that, there's certain factors in a budget that you have to look at. For example, to keep things simple, you want to look at, like we said, am I going to be regulated and where? What is the cost of my company that I'm going to incorporation? What technology am I going to use? What liquidity do I plug in? What's my marketing? Okay, what's my marketing strategy? Which is a whole another plan in itself. And how do I connect with banks, right? So if everything kind of goes hand in hand. These are the 4, 5 factors that you want to look at from the start and get go, right? So that's the key thing in your budget. And now, what I mean about adapt and scalability is, of course, when you come and you do a budget, you have a plan in mind. Am I NIB? Do I work with clients already? Do I want to steer away from brokers and open my own business? Do I have clients? What country should I target? How do I target these countries? Let me build a plan based on these countries. So now I have my budget, right? But 6 months to a year down the line, okay, you're saying, okay, well, my budget needs to adapt or change because the circumstances have changed. Either the funding has changed, the country targeting and the marketing has changed. So I need to adopt and I need to change my plan a little bit to adjust it, but still keep on the same path. Okay. The other part of the budget, okay, part two for part three, let's say, is the scalability. As I'm growing, how can I scale? How can I scale up? Now, that is in technology. My liquidity providers, do I add more? Do I add less? What deals do I have with my liquidity providers? Can I do better? My marketing, should I adjust it? I measure everything via CPA, CPL. Whatever you do in your marketing budget has to be measurable and attainable with set goals. All right. So those are the things that you want to put into your budget. Another part of the budget is your operational cost. You know, where do I hire? Where do I hire staff? Where's my base? What office do I hire? How big do I need it? Computers, uh, and so forth, more and more. I mean, the budget is astronomical, but don't be scared of the budget. This budget is good because you're putting everything down to avoid any surprises in the near future of what to happen. Anything comes across as a new cost, you add it to the budget, you add it to the cost, and so forth. Okay, so now that we have the costs briefly described and understood a bit, then we want to go to the revenue streams. Where do I look for my revenue streams? So let's say we have the budget. We know approximately XYZ is the amount of money that I need to be in operation for at least 3 years. Okay, now how do I streamline my KPIs? How do I streamline my revenues? What do I look for? So when I say KPIs, is you keep performing indicators. So it's like CPL, which is your cost per lead, your CPA, which is your cost per acquisition. Okay. If I work with partners, how do I remunerate with partners? What support do I give partners? What return are my partners giving me? What reach do my partners have in regards to countrywise and so forth, right? So that's your partners, your IBs, and your affiliates. That's one uh, revenue stream. Retail, retail flow ties in directly to your marketing and your branding and your CPAs and your CPLs, right? So I want to attract retail clients. If you're targeting a specific region, country, and so forth, the retail client is different. It's approached differently. What you offer them is differently, and so forth. Okay, so that's how you base your marketing around. That being said, you have to decide what region you want to penetrate. Now, Finance Magnets a while ago released an article. I don't know if you guys remember this. Average depositors for Forex, average depositors in FX, average depositors first time, second time deposits, and so forth. So, you have to do your research and then you can actually see what countries you can get into. Now, deciding in a country that you want to get into is not only saying I want to get into that country and then I start my marketing and so forth. You need support. Now, you need on-ground support where it falls back into partners, okay? And then you need support from your marketing and internally support languages, multi-languages. One way to do it is, you could have a call center, of course, but you have to train your call center and have multiple languages, right? So you want to look at your FTDs, your first time deposits, and your retention, right? Most of the times in white labels and retail brokers, the key focus is the FTD, a first time deposit. That is because most retail clients for retail brokers will come deposit with you, withdraw, test you in your service, because they want to be sure and comfortable that you're doing everything correctly, you're doing everything by the book, and so forth. The second revenue stream from your client is the retention side of the business. When if a client is happy and you're providing good customer support 24/7, then you're retaining the client. So you want to look at the lifetime value of the client. Now, all these things that we just mentioned goes where? In your budget. So all these are measured. So whatever you do, whatever penny you spent, whatever dollar you give out, you want to make sure it provides added value, either in a dollar notional value or a growth value within the company that adds value to your growth and sustain your growth for the future to come. Okay. So, these are the key things to look at. Now, if we were to break down everything in more detail, like regulation, technology, liquidity, marketing, and revenue streams, then we go into it more and more, right? So, what I want to do is I want to open the floor to more questions. And basically, what are you looking for in a sense? Because one person looking for a white label could be different from the other, right?
Mm-hmm.
So it's always better to get questions in saying, what you need. If there's no questions, what I can do is I can go through a breakdown of, first step and so forth like that. But I'm pretty sure there'll be some questions.
Yeah, absolutely. So the first question that came through here is, I guess, kind of going back to the very beginning. So, um, talking about forming a company based on a white label solution. So, if I, Rachel McIntosh, wanted to start offering a white label solution, or start, put my own branding on it, Rachel Industries LLC. Um, what would I need to do in terms of establishing a legal entity? In terms of building my both the legal entity and also the outer world, the excuse me, the front end of the
Okay,
product. Yeah.
I got it. That's a perfect question. Okay, so building a white label, actually, the first thing you have to do is to get an incorporation, a company,
Mm-hmm.
and get a regulation under that company.
Mm-hmm.
Okay, because when we white label, basically, we have to go to MetaQuotes. MetaQuotes is the provider of MT4 and MT5, which is the white labels that we offer.
Mm-hmm.
Now, we also have to get it approved by them. So the clients coming in for white label, they have to be one incorporated, to have a website, have a logo, and a website, an IP address. Okay. Once you have all this, we have a checklist that we give clients that they have to fill out. So yes, I am incorporated. Now I can be incorporated in Seychelles, Vanuatu, EU, anywhere you want. Basically, it's up to you. It's a company, and then select a regulation that you want to be under, right? Once that's done, you create your website. And then when
Mm-hmm.
you create your website, you're creating the products and information you have to offer to your clients. Now, this goes out to MetaQuotes via us, of course. They check it, they approve it, they give us the white label, and then we start building your brand and
Mm-hmm.
solutions for you.
I see. Okay. Thank you, Peter. So our next question, you already touched on this a little bit, which is how should we plan our budget and what are the main considerations? So let's just start. Let's take a look at this from a ground zero, absolute starting point. If there are three
Okay.
things that you have to consider, what would they be?
Okay, so first you have to put down your operational costs, okay?
Okay.
But before you do that, you have to have a particular mindset in saying, what do I want to accomplish in my white label? What
Mm-hmm.
target audience do I want to go for? Do I want to do retail? Do I want to work with partners and affiliates? Do I want to do white labels within my white label solution? Okay. Now,
Mm-hmm.
by putting all this down, you're basically building your business plan around that. So once you have that target in mind, then you have to look at your operational cost, your technology cost, your marketing costs. Okay. And once I got that down, I know what I'm going into the business for and with. And then the final aspect, the part of your budget is your revenue stream. Now, whatever I do, like I said earlier, any cost I do, I have to have different revenue streams, which is CPA, CPL, FTDs, redeposits, volumes. Do I want to be do I want to hold the risk on myself, or do I want to pass the risk out onto others? Do I want to A book and B book, basically,
Mhm.
right? What partners do I want to work with? What remuneration plan do I want to work with? Now, a lot of the times people who do white labels, they're normally like IBs who have already clients, or investors who have a network of clients and so forth, right? Now,
Mhm.
a lot of questions that they do is when they go to brokers, which they don't like, is I want to offer, um, you know, a CPA, or every time they fund on the first deposit, they want to get a kickback. Or they want to get a kickback on volume, or they want to get a kickback on P&L. A lot of brokers, limit them into what they can do. But
Mhm.
if you have your own brokerage, you can set the own parameters that you want,
Right.
right? You can change the spreads, mark up the spreads however you want. You could offer as many P&L deals as you want. You can do competitions as many as you want. So the sky's the limit in what you can do. As a white label, you control your brokerage. You do what you
Mhm.
like. So you hold the reins, and then you go further. The other part is if you are an IB or an affiliate, or an experienced trader with a network, I would say you're 80% already there. What does that mean? Because uh, 20% is setting up your technology and your operating costs, which is not a big deal, because if you white label through us, for example, we take care of all your technology,
Mhm.
right? We minimize the operational costs, right? Marketing, we can give you guidance and all that. So the difference between going out on your own and doing a white label, okay, is if you do a cost analysis within your budget, you see that your operation and your technical cost decrease dramatically, and you focus on your revenue streams and your marketing, because that's the key point. If you could do those two out of the four, then
Mhm.
basically you're increasing your chance to be a more successful broker. Now, keep in mind, most of the time, white labels is just a starting point, right? Because you're using someone else's technology, you're using someone else's liquidity and risk, and you're managing it from your side and what you offer to your retail clients or your institutional clients that you onboard. If you progress and you see that your company is growing within the budget, within your conservative or your moderate, your aggressive plan within the budget, within a year, 6 months, or 2 years, then you can buy your own MT4 and MT5. Gives you more freedom and then in what you can do, right? But
Mhm.
then you increase the cost in others, in operations and marketing, and technology and so forth. But that's okay, because you're already to that point that you can do. So that should be in your plan for growth and scalability.
Absolutely. So when it comes to deciding between MT4 and MT5, which platform is right for which goal?
Okay, see, that's a good question as well, because a lot of the times we get that question. Now, in reality, depending also what country you're looking for, Asia mostly trade on the MT4, right?
Mhm.
Because they like the MT4, they use expert advisors and so forth, right? But now that was the case more 2 3 years ago. Now MT5 has advanced a lot, and you see more brokers out there and other institutions changing from MT4 to MT5, right?
Mhm.
And the reason for that is, again, scalability. MetaQuotes doesn't really support MT4 anymore in updates and so forth, because basically more and more traders, investors, and companies are going to the MT5. Now, MT5 gives brokerages a bigger advantage, because you could add more groups, you have unlimited amount of clients that you could onboard, not like the MT4 where you have limited limitations. Groups your limitations as well. You could add other asset classes like stocks, fractional stocks, because of the digits. There's wider digits. You can add more digits on the MT5 where you cannot do on the MT4. In the MT4 you have to round off, so someone kind of loses on that side, most
Mhm.
probably the client. So it's always better to do it on the MT5. Cryptos, if you're into cryptos, it's better to do it on the MT5 than it is on the MT4, right? So there has been a shift in the market from MT4 to MT5, and increasing dramatically, over the years. We do both MT4 and MT5, but if you were to ask me, I would think the better bet would be MT5 because
Mm,
of the scalability and because of the added support that it has against the MT4, which really doesn't have any support, right? So
mhm.
why buy an older platform when you can get something more advanced? And you'll see that more retail clients are turning more towards the MT5 than the MT4 slowly, but you still have clients that prefer MT4.
I see. I see. So let's switch gears for a moment and talk about liquidity. What is the importance of liquidity for a white label in the early stages of setup?
Okay, right. So, like with any business that you open, you want to stand out from the rest, right?
Mm,
Now, having liquidity, there's a couple of aspects. You want to have liquidity from a company that's reliable and trustworthy, okay? And you want to have go with a company that basically offers multi assets because your liquidity is the bloodline of your operation,
mm,
okay? Now, I give you a very, very good example that we've been in discussions for the last couple of days. I have a lot of brokers coming to me asking us for liquidity, wanting to leave their own current liquidity. And I always like to ask why, right? Because it's not only just the pricing and so forth. Sometimes going cheap is more expensive because
mm,
I'll tell you, I know that companies are getting some data very cheap out in the market, but what does that mean? They're not
mm,
getting reliable data.
mhm,
So if you're getting data that is 10 seconds or 5 seconds delayed, you're getting arbitraged.
mm,
You could have an investor put in $500 and make 500,000 by the end of the day because he's arbitraging. What does that mean? He's checking the prices between another broker or another LP, he sees that you are delayed. So if I'm buying the euro dollar, okay, and it's going up on my X platform, and on your platform, it hasn't gone up yet, and it's got a 3 second delay, and I can trade on it, I'm making big click sizes there to basically execute my trade. So I'm kind of like seeing where the market's going before it even gets there. Now,
mhm,
this is very important. So going back to if I'm deciding I'm going to A book or B book my business, meaning if I'm going to B book and hold the risk upon myself, and I feel trusting of the liquidity and the feed coming in, it's going to cost me. It's going to cost
mhm,
me a lot more. And then what are you going to do? You're either going to close your business, okay, because they're going to make you bankrupt, or you're going to tell the client not to trade anymore because you're having technical difficulty, you might as well lose your business. So it's a lose-lose situation.
mhm,
So selecting the right LP with, you know, market execution within milliseconds is very, very important, right?
mhm,
I even when I speak with clients, I give them a live account to
mhm,
trade, which are the rates they're going to get with all the asset classes to test it before they even, purchase it, let's say,
mhm.
because you got to see what's going on. And you can see after hours, different sessions, US, European session, Asian session, and then you check it, right? Because these are the pitfalls what could happen to you at a later stage that could be too late and be detrimental to you and kind of
Mhm,
mess up the whole thing in
mhm,
your budget, right?
mhm,
Diversification is key as well. So if I am a new white label broker and I go out into the market and I offer FX and indices, so what? So does everybody
right.
else. What
Mhm,
makes you different? Well, if I'm giving stocks, if I'm giving fractional stocks, swap free crypto, CFDs on cryptos, indices, traditional FX trading, ETFs, bonds, then you're diversifying your portfolio of clients. You're also a more serious broker because it's not easy to attain all this data and liquidity. So we take pride in how we arrange our liquidity to clients. We have subscriptions to the exchanges that we assist clients that we can subscribe them to the US markets.
mhm.
We offer futures. We can subscribe them to the CME. You want to do everything correctly and be consistent because if you don't, it'll come and, bite you in the rear. All right. So it's
Absolutely.
always good to do it right from the beginning. And reputation, right? So, you want to be reputable and so forth. Now, when you get liquidity, for the more advanced side of it on the
Mhm,
institutional side, using bridges we do what is called advanced aggregation. So we have multiple LPs on our side. So we design one stream. Okay. So I'm getting the best prices. I make other LPs compete against one another so I can get best bid, best offer, and best execution to offer my clients. So whatever I get, I give to my clients, no matter if you're a big client or small client, we have that one stream. And we believe in doing that because, we want to be fair with everybody in that sense. So these are the things you want to look at with an LP.
Absolutely. Okay, thank you for that, Peter. Okay, next question. Touching on a couple of the assets that you just mentioned about 30 seconds ago. First, I want to ask you about fractional stocks.
Okay.
Why are they important for a white label solution?
Okay. So like a white label solution, the majority of time you look at retail clients, right? Now, your retail investor, basically, we offer real stocks, but if you see that a stock like Dell or Apple, for example, is $600 a share or $1,000 a share, some investors cannot trade that. Now, the fractional stocks are one-to-ones because it's backed by real stocks, so it's an actual stock, right? But you buy a fraction of it. Um, by buying a fraction of it allows you to buy a smaller portion of it so you could afford it, right? So this is why it's important. We had a lot of demand for it. Not a lot of LPs offer it. We do offer it, and we see it big amongst traders in regard into the market for the fractional stocks. Now, we hold the stocks on us, and then we execute it in the market as a one contract stock, all right? So at the end of the day, you're owning a partial of that stock. You don't get it deliverable, of course, because it's within our accounts. You can see it traded within the markets, but it's not like a deliverable contract of a stock that you get. But most institutions or brokers don't do it that way either, in that sense. But it just gives you the opportunity to buy a stock that you couldn't afford.
Right, right. So what about also swap-free crypto versus CFD cryptos? And do you see this as like a growing thing? What do you think?
Yeah, I mean, I see the crypto industry growing dramatically. Again, it's a different market to the FX markets. The knowledge they have and understanding and the mentality is totally different. It's a big growing market. So what we do is we have, of course, the CFD cryptos, okay, which is a 1-to-5 leverage, but we also have the swap-free crypto. Now, the swap-free crypto is backed by real crypto, right?
Mm,
So if most of the crypto traders that own crypto, they're I would say fanatics. Let's say they're true to the crypto. So if you bought crypto at 50,000 and it's dropping to 20 or 30, they won't sell it. They'll hold it because it's like buying a stock. You want to hold it even because you believe that it's going to go back up and go
mhm,
higher. When you do that, okay, and you invest to hedge your position to the downside so you can kind of break even or don't lose money, meaning buy it on the downside, it costs you, and you hold it for a couple of days, it's going to cost you a swap. The swaps are huge on the cryptos, right? But the way we do it, because we want to support the clients in that sense, we don't charge any swaps.
mhm,
So if you're buying the crypto at that particular rate and you're holding it for days, weeks, and so forth, there is no swap on it on a daily
mhm,
basis,
mhm.
right? So that's why it's also traded on a one-to-one and not as a leverage product. So in essence, I'm attracting the CFD crypto trading clients and the swap-free crypto trading clients as a growing market as a separate part of the business because it's different from the mentality of the FX indices and stock traders and so forth. You want diversification.
So if you're on the fence about whether or not to offer crypto, what would you say? Go for it or maybe not?
I would go for it, but you have to also make sure that you have an LP that provides liquidity for it because of the
Mm-hmm.
volatility, right? Now, a lot of brokers will come to me and say, listen, we want to offer cryptos, but we don't understand it too much, but we see that everybody's getting into it. Could you provide us liquidity? We be secure. Yes, of course. We
Mm-hmm.
don't offer any asset class when it's not backed by liquidity because
Mm-hmm.
we offset our risk. We don't hold anything internal. We don't internalize. We offset our risk within exchanges and within our ecosystem with multiple LP structures, banks and non-banks. So it's safe in that sense. right? And
Right.
how does a broker make money? Basically on commission, right? You charge a
Mhm.
commission.
Right. From that angle, it is beneficial to have multiple different assets, like, sort of
Yes,
more assets,
yes.
as long as
The
you have the
more,
liquidity.
as long as you have the liquidity, which is offering you the support in it, then yes, why not? Right? Because it gives your marketing more tools to promote your brand. It gives your salespeople more tools to promote the brand. You feel safe. You don't have to worry about lack of liquidity and so forth, especially from our side. But yes, you need to be a multi-asset broker right now in this day and age because everybody is looking to diversify. And don't forget about the early boomers, the younger generation that invest more in crypto than they
Hmm.
do in fixed income or other asset classes. And then the late boomers who are looking for fractional stocks that missed out before, or the early boomers looking to buy a portion of the stock, but they don't want to invest for the full amount, right? So these are your client categorization. These are the types of clients that are out there for the retail broker, right? But you also have investors, high net worth investors, high frequency traders, hedge funds, and so forth. But you're growing your business, you're scaling it to get to that, because as a white label, you're starting off with your base of clients that you're working with. If you're an IB or an affiliate or your network of clients, and plus your marketing and so forth,
Right.
but it's scalable.
Right, that's the key. So imagining that we have everything set up, we've got multiple assets all ready to go. What are the key streams of revenue that people should be focusing on?
All right, so there's multiple revenue streams. So as a company, right, you're looking at you're probably mostly going to STP most of your flow, which you're going to A-book your flow. So you're looking at your commissions on that side. If you want to internalize your risk and manage it and come up with a formula, you can do that. That's another stream that you're looking at. So your commissions, your risk management, let's call it, right, on your side. Then the other streams of revenue, you're looking at your partnerships that you're having with IBs and the revenues that they can bring, other white labels that you can onboard through your system, offices generally that you can generate through partners overseas to expand your reach because you don't have to physically be there because you have IBs and people on the ground. It's like representing your company there, but you got to also be careful because you don't want them to misrepresent. Okay. And then, along the way, you come up with different business plans and different strategies with partners that you may have overseas to figure out revenue streams and how you can work together. You can give webinars or seminars as well now where you can educate people on how to trade the FX markets and so forth, technical and fundamental analysis. This is promotions where you can generate and add to your current revenue streams of retail partnerships and professional traders.
Right. Right. So so assuming let's say we've been talking a lot about starting from zero and sort of moving up from that perspective. But let's say that I was an existing IB or an affiliate.
Yeah.
What should I look for in a white label solution?
Well, okay. Most of the times, IBs and affiliates, they don't want to deal with the technology part of it, right? They
Mm,
want to basically have it ready because they have the clients. So they're tired of basically working with other brokers and so forth of giving them their plans. I hear that a lot of the times uh, they're not getting paid and so forth. So what they should look for is basically a company that's trusted and reliable in the technology. They like their technology. I mean, we can even do websites for clients, connect them with CRMs because it's important, right? Because when the client registers, he goes on your landing page, then he goes into the CRM, and then your client and then your salespeople will call them and inform them and so forth. And then you have a database and you know how to talk to your client. IBs and affiliates don't want to deal with this. They want basically someone to help them, to back them up and saying, we need liquidity. We want to mark up ourselves. We want to charge commission. We want to do the risk management 50-50 on them and then pass the rest of the flow to the LPs and so forth until they get used to it. So they kind of want everything ready except the marketing and the sales, right?
mhm.
That's what they want. So if a partner such as exclusive could do that, then it's ideal for them, right?
Right. So you mentioned that you can for example, develop websites and that sort of
Yeah.
thing. So
We can
yeah.
even register a company for them. We can create a company, okay? Get the regulation for them. We can create the website. We can provide a CRM where it's connected to them as well, a branded website, a branded CRM, everything branded to them as they need. So they don't have to go and outsource, because if you keep looking outside and getting bit by bit, one, it's going to be more costly. Two, you're involving too many third parties, and then at the end of the day, one's going to blame the other why the other's not working. So that's why you see a lot of tech companies doing a lot of the internalization, where they keep everything internal, because they want to give you a good package, but they also want to help you, and they don't want to rely on someone else. Now, if I'm going to rely on someone else to give me a CRM, for example, I have to wait for him to finish before I connect my website, for example, and vice versa. So we decided we rather do it ourselves internally,
Right.
where we can develop everything. We have web developers internally. We even have a legal law firm internally as well
Hmm.
within the company, because we open up offices globally as well. But that's the extent that we're growing, and we're optimizing ourselves moving forward that way, because adding more and more third parties at times could be a headache, and sometimes don't even get off the ground.
Right. That's a very, very good point. So
Wow.
so what additional products and service? We kind of got into that a little bit. You said there's a law firm, there's all these different things.
Well, I mean, like we said, the website, the law
Mhm.
firm that we do for regulation, we have PAM services that we work with, social platform, um, widgets that you could apply, like uh, uh, was it leverage, scalable leverage that works automatically based on the volumes. And these are plugins that you can plug in. Now, when we give out a proposal to a client, he doesn't have to take everything at once. He just has
Mm,
to take the key things. And then as he grows, he could always add them as a plugin.
right,
That's called scalability moving up, right?
right.
But as a white label, you want to just get the essentials. You want to get your company, incorporation, website, technology, and liquidity, and your
Mhm.
CRM, and then
Yeah.
that's it. And then you scale it up from there.
So it's not, I mean, it sounds like, that you guys are really offering an all-in-one solution that is
So
scalable.
yeah, this total package solution, it's scalable in every aspect. I mean, every little part could be worked on together, because we look at white labels as our partners. We need them to succeed, in the sense
Mhm.
that we invest a lot into them, time and money, right? So I don't want to really give a white label to someone who really doesn't understand the market, right?
Mhm.
I'm not going to really say no to them, in the sense, all right, but I'd advise them, right? I
Mhm.
mean, a lot of companies will just take on anybody who says, I want to become a white label. But do you understand the cost of it? Do you understand how it works? That's why we actually help them as well, kind of hold their hand, guide them as much as we can, because we've already done all this, right? We've done many white labels, many white page uh, websites, and we saw the advantages and the disadvantages, what to do, what not to do. I will never tell a white label what to do and what not to do, but I will suggest. I say, look, we did this, or others did this, and they failed at this, or try this, because now if you could overcome that, then yes, then okay, then maybe you should do it, right?
Right.
So it's kind of like, partners. I don't look at them as clients, I look at them as partners, because their success is our success at the end of the day.
Mhm. We have one question from the audience, which is, why would a crypto trader use an FX platform to trade crypto when they could do the same on a cryptocurrency exchange? What are the advantages there?
I love that question. I'm going to tell you why. Okay. I've set up a lot of crypto exchanges. Okay. Now, and I also have clients that are crypto exchanges. I'm going to tell you why. What's the difference? On a crypto exchange, your liquidity is based on a matching engine. Okay.
Mhm.
Your buyers and sellers. So you have to connect with multiple buyers.
Oh, Peter, sorry, I think you muted yourself.
Sorry.
There we go. Yeah.
Yeah. Okay. So you have to basically uh, have your matching engine full and your top of book.
Mhm.
Okay. And the way we aggregate using the MT5, because the MT5 could offer swap-free cryptos, basically, our top of book is constantly high. Okay, I mean, you can see the depth of others, okay, but we focus mostly on top of book because someone can come in and buy 5 BTC, 10 BTC, 50 BTC, 100 BTC, and it's automatically refreshed. But the problem is that when I was discussing with exchanges is that matching engine and the connection of the matching engine with other exchanges. Because in 1 minute you could have a high order book flow, or you could have a one-sided order book flow and then down to almost nothing. All right.
Right.
But with us, backed up as a CFD or a swap-free crypto, I think it's more reliable and it's more sustainable as liquidity than a matching engine in itself.
Yes.
Hope that answers this question.
Yeah, no, I certainly did for me. We have another question from the audience, which is, what is the biggest single appeal of your white label solution to your partners? So what, in terms of feedback that you get, do they talk about cost, simplicity, time to market? Is there any one thing that comes up a lot?
They like our liquidity, okay? Because I tell you, I have had many instances that white labels, a lot of white labels focus on just the white label technology, right? But our main focus is liquidity, but we give the white labels as well because we're a tech and a liquidity provider. Now, if I give you white label solution on the MT4 and my liquidity is bad, then you might as well not even open, your brokerage,
Right.
because you're going to be susceptible to risk, arbitrage if you don't have good data, right? And a lot of white label companies, just saying, right, may not provide you the liquidity that is up to par with execution in milliseconds. And a lot of white label tech companies don't focus on liquidity and focus more on third parties, which is more costly for them. So they may go for the cheaper option instead of going for the decent option to provide real liquidity, especially with white labels that are going to have a B book flow and not A book flow. They have more risk than anybody. And keep in mind, when you open your white label, you're a target for arbitrages and high frequency traders, because they say, is this guy's liquidity good? Is this guy's execution good? Is his feed good? Is it delayed? Maybe I could arbitrage him and so forth. I have a lot of instances with examples that delayed data cost a lot of white labels a lot of money from the start, wouldn't even let them move on to the next stage. So liquidity for us is key. Time to market is key as well, and the addition. But I would say the liquidity we give within our white labels, because in reality, creating a white label is easy. It's no big deal. And the white label is basically the cost of meta quotes. We don't mark up on that. We just give them the cost of meta quotes and then plug in our liquidity. That's where our key focus is.
Yeah, absolutely. Peter, before we end our today's webinar, do you have any closing thoughts?
Yeah, I mean, guys, if you want to create a white label, come prepared as well. Understand the market, and give me a call. We could always talk about it, but always look for a partner that has a good tech and liquidity solution at the same time. Yeah.
Thank you so much, Peter, and thank you so much to our audience. And remember, audience members, if you're going to be at the Finance Magnates London Summit next week, you can meet Peter and Exclusive Capital at triple booth number 9, excuse me, and I'll be there as well. So be sure to pop in and say hi in the speaker hall. Thank you so much, Peter.
You all.
Yeah,
Thank you.
definitely.
Thank you. All right.
Thank
See
you.
you soon,
All right.
Rachel.
Thanks, everybody.
Thank you.
Bye.
Bye.